Welcome along to the Property Academy podcast. I'm your host, Stephen Knight.
I'm Andrew Nicol.
And tonight on the show, we're talking about to buy or not to buy. Yes, should you wait for 6 months just to see what happens in the property market before you make an investment? Now, sometimes we meet people and they get very close to investing in property and then they think, I'll just wait 6 months. And we want to tackle this today because it's a bit of a mind trick that we tend to play with ourselves when we're thinking about making a big decision, whether that happens to be a big decision in investment or a big life decision. Maybe I should just wait 6 months and see what happens. Now, I've got some great data that I'm going to show you in a minute, specifically about what has happened to the property market over any given 6 month period. But before we get to that, Andrew, you've worked with a lot of investors who want to grow a big property portfolio. And even though they want to build a portfolio and invest, they'll sometimes say, well, I just want to wait about 6 months. And what I want to ask you is, what do they really mean when they ask that?
Yeah, it's a really interesting mindset, and it happens all the time. And in fact, one of my investors, they live overseas, and she's been the driving force behind building their portfolio. And at the start of us working together, she said to me, I want to have 10 rental properties. Okay, that's great. That's a great ambitious goal. We're 18 months down the track. How many do you think we've got so far?
Zero,
because they're waiting for 6 months. And look, often people will say one or two things. They'll either say, I want to see what interest rates we're going to do. That's a big thing at the moment because interest rates have been a bit more volatile or a bit higher than what we've seen in the past few years. Or they want to see what happens with the market. Those are the two most common things. And look, it'd be fair to say that I've fallen into this trap in the past as well. You know, you often think you do trick yourself into thinking it can't get any higher when the market's going good, or interest rates are never going to be low again. You can convince yourself that the next 6 months we're going to have a clearer vision of what's going to happen in the future.
Now, I often think that this is a bit of a mind trick because you think, well, in 6 months, if I look at what happens to the market or I look at what happens to interest rates, I'll have more information and so I can make a more informed decision. Now, the truth is that if you speed up in 6 months' time, you'll know what happened over the prior 6 months, and interest rates will have either gone up, down, or stayed the same, and same with the property prices. But you will be none the wiser about what is going to happen in the 6 months after that. Because the truth is that nobody can tell what's going to happen in the future or if the world's going to stop spinning tomorrow, but we assume that it's going to. And the truth is that investing comes with a lot of uncertainty, right?
Absolutely. There's always going to be uncertainty. And I think that probably right now when people are saying, I'll wait for 6 months, they're wanting to see if the interest rate's going to come down a little bit, or the OCR will stop increasing, or the market might show signs of recovery. But again, you're still going to have a small amount of data extra than you have today, because we've got massive amounts of data, right? Historically, you're only going to have another 6 months, which really doesn't make that bigger or that clearer a picture.
Well, if nothing much is going to change in 6 months, Andrew, what's the harm in waiting?
Well, I didn't say that nothing would change. What I said is that things won't get any clearer. And we're going to go into some stats about what could change. But the harm is this. Often people don't wait 6 months. I've worked with so many investors, and the ones that wait for 6 months never actually end up investing, or they invest 6 years later.
Well, or your person you were just talking about before wanted to grow 10 rental properties. They wanted to wait 6 months. You've said you've been waiting 18 months.
18 months. Yeah, I mean, that example is a great one because that person's missed out on quite a few opportunities and now is kicking themselves about the opportunities that they missed. And actually, I remember I've got a great example when I was reading the notes for the show. There's a client, I can't remember their name. Well, I couldn't use it anyway, but they came to me. They were introduced to me by a mortgage broker, local mortgage broker. They said, hey, look, they're really excited about investing in property. They've never done this before. They're a little bit nervous, but they want to invest in Rolleston. I said, great, I know everything about Rolleston. I can help them do that. Now, I went and chose them a property. This was while we were in COVID lockdown. Number one, the first original lockdown. And I said to them, we're not going to let you sign on anything while we're in lockdown because we can't do due diligence. We can't go to the site. We can't do all the normal things. And it just didn't seem appropriate at the time. So they said, that's good. We weren't going to sign anyway. We got a property all ready to go. We came out of lockdown and they said, we might just wait and see what the market does.
Want to wait 6 months?
Yeah.
Yeah.
What happened in those 6 months, Ed?
Oh, it went bloody bonkers
Right.
at Rolliston. I'm kicking myself that I didn't buy, that I didn't go to a non-bank lender and try and get an extra property over that time.
And the funny thing is, so their price was, I think, $475 or something like that, or $495. We got a discount for them. That by the time they actually got in a position where they said, we really do need to invest, they were getting a bit panicked because the market was going up so fast. Their approval wasn't enough to get them in there. And that was when the property prices got to $670.
And the difficulty is that we often say that whether you invest or not is not entirely up to you. You don't really get to pick when you invest.
If you're borrowing money.
If you're borrowing money, because it's always up to the bank. So sometimes the thinking, I'm going to wait 6 months, is a bit of a misnomer, I would actually say, because you may not be in the position where the bank's going to lend you the money in 6 months. But I tell you what, I want to go into the data as well, because my team said to me, well, what is the opportunity cost of waiting 6 months? What do you miss out on if you wait 6 months? And so I've crunched the numbers for Auckland, Christchurch, Dunedin, New Zealand, and all of the Wellington region. And the interesting thing is,
So what does this show?
well, what this shows is that if you look at the 6 month change in property prices in each of these regions, in New Zealand, for instance, 84% of the time, property prices went up over a 6 month period.
84% of the time.
So that's about 5 and 6 times. About 16% of the time, property prices went down over that 6 month period. And about 0.5% of the time, there was no change at all. Now, I want to put this into context for you. Let's say, just think about a dice, a 6-sided dice, and it's got 1, 2, 3, 4, 5, and 6. I just wanted to see your eye twitch by me saying that. Yes, Ed, that's what a 6-sided dice is. And I want you
so
to...
just a normal dice.
Yeah, a dice, that's right.
A die is the correct word, but
That
yes.
would play... I thought, yeah, because dice is the plural, that's correct. Better living, everyone. follow us for more grammar advice. And you're rolling this die. You're rolling the die. You roll it. What did you get? Well, if you get a 1, 2, 3, 4, or 5, your property price went up. If you roll a 6, your property price went down. Now, let me just be clear. Property prices don't work like that. It's not gambling. It's not by random chance. But I'm trying to put this into context so that the balance of probabilities, or at least what has happened in the past, starts to really get embedded in your mind. Do you understand that?
So this is any 6 month period.
This is any 6 month period from January 1992 up to the latest data in 2023. So about 31 years worth of data. But on top of that, we also need to look at individual regions because, of course, you're not while you are buying a property in New Zealand, sometimes Auckland property prices will be going up in value while Wellington's going down. And because of that, it looks like all of New Zealand's property prices are going up, but your property in Wellington isn't. So let's look at the individual regions to get a little bit more granular. And the probabilities do change. So in Auckland and Christchurch, it was about 3/4 of the time your property prices would have gone up over any given 6 month period.
So a 4-sided dice.
Well, I did actually Google 4-sided dice, in preparation for this episode. It was like 4 triangles stuck together. Yeah. And if it was in Wellington, it's about 81% of the time property prices went up over any given 6 month period. In Dunedin, it was about 70% of the time, 68% of the time. So even then, you've got a 3 in 4 chance, if you want to put it in those terms, or at least in the past, 3 times out of 4, property prices went up over any given 6 month period, while property prices fell in about 22 to 25% of the time. And so if you're in an average market, and there is a reasonable case to make that, oh, well, property prices are falling at the moment. Maybe we're not in an average market. We'll come back to that in a moment. Over any given 6 month period, there's a good chance that you would have made money depending on when you purchased it. And Andrew, put that into context for us. What is the harm of waiting 6 months?
Okay, so if you look at the average change in property prices over the 6 months, it's between 3 and 3.5%. Now, Christchurch was 3%, Auckland was 3.7%. So let's go for the lower amount of growth. Let's go for the 3%. If you don't buy a house today, you say, I'm going to wait 6 months, and the property price was $600,000, well, on average, you will lose $18,000 on average. Because you could have made that 18 grand if you didn't wait that 6 months. Now, just to be clear, this isn't the outcome that everyone was going to get. This is the outcome of the average person. Now, the best case scenario in Dunedin is that prices went up by 29% in 6 months.
So if you look at when the Dunedin property market was its hottest, property prices went up by 29% in that single 6 month period.
Yeah, so a $600,000 property that you waited to buy is now worth an extra $174,000.
Well, we need to be balanced. So what was the most that the Dunedin market fell within 6 months?
So it went down 10% over a 6 month period. So if you were really lucky and you timed that well, then you would have saved $60,000
over that 6 month period.
Yes, correct.
And this is really important, right? So on average across all of New Zealand, property prices increased by 3.4% over a 6 month period. So again, you would be making, let's call it 18 grand if that was to hold for you. But there are a range of different outcomes. Now, for you guys on the podcast, you can't see this, but you guys on YouTube can. What I've got here is the distribution of what happened over any 6 month period. Let me just check.
Look at how much.
Wait a second. I've just got to check my data. I'm a good person. This is for Auckland. I was just making sure this was for a region rather than all of New Zealand. So if you'd invest in Auckland, there are a lot of times where property prices over a 6 month period increased by more than 5%. Now,
that would almost total the entire other options by the looks of it.
I can tell you exactly what it would be because I have the data. No, I don't have it right in front of me. Let me calculate it.
Just add those together.
What?
Oh, yeah? Okay. I'm just teaching you how to use a spreadsheet.
Oh, don't you dare. I'm not up for your shenanigans today here, Andrew. About 39% of the time, property prices increased by 5% or more.
Isn't that amazing?
Over a 6 month period. But what I really want you to focus on is look at the number of times, which was over a 6 month period, 143 6 month periods, property prices increased by 5% or more. Compare that to the number of times that property prices fell by more than 5% over any given 6 month period, which was 23 times. So property prices increased by 5%, 7 times more than the times that property prices fell by more than 5%. And so I'm just trying to show you that, yeah, the average might be here at about a 3% gain, but there are a range of different outcomes that might happen. And actually, when property prices fall, they tend to fall less significantly than in terms of what they gain. Now, you might be thinking, so you guys just telling me that I should just blindly buy whenever I can? Well, that's not what I'm saying. Andrew would tell you that.
No, I would say that. I was thinking absolutely I say that. Well, not blindly by that. I mean, absolutely you need to apply some factors to your own personal situation, but you can't overthink it. The people that overthink it end up not doing it.
Well, look, I'm an overthinker, so I'll give you a slightly different answer. What I want you to do is have an eyes wide open view of what the risks actually are. So I'm trying to get you to move from an emotional response, which is usually when people say, I want to wait 6 months, it's because they're uncertain or they're unsure or something's not quite right or they're worried about risk. And what I want you to do is logically think through, what am I looking to see in 6 months' time? Or am I being emotional? Am I making a good decision by waiting for 6 months? And sometimes that might be the case. Often it won't be, but sometimes it could be the case. Or are you being emotional? So here's what I want you to ask yourself. If you want to wait 6 months, what do you expect to see change for you to invest? If it's with interest rates, if they are the same in 6 months, would you still invest? Or is it that if they went up by 2%, that's when I wouldn't invest? What do you actually want to see with interest rates before you decide to invest? That's the first question, because then if you say, well, I don't really know what I'm looking for, then you're possibly being a bit more emotional. If it comes to property prices, well, again, what do you want to see happen over the next 6 months to give you the confidence to invest or decide that, hey, it's not actually for me? And that could be, I want to see that property prices rose by 3 out of the 6 months prior for me to have the confidence to invest. And then you say, well, that's cool. But in doing that, you will miss out on any potential capital growth.
Sure.
So what's telling you that property prices may increase 3 out of 6 times over the next 6 months? And do you want to miss out on that? So I'm not trying to tell you you should invest or you shouldn't, but think through logically, what is it that you want to see happen in the next 6 months that would make you decide either way that you are going to invest or not? Or are you doing what we more typically see with investors, which is they use this as a crutch, an emotional crutch, to say, well, I'm just going to wait to see what happens, and I don't really know what I'm looking for, and I don't know how to evaluate the data, and I don't know what I'm looking to see in the market to give me that confidence. Because if you are having an emotional response, which is natural when you start taking a lot of risk and investing a lot of money, it's natural to have some emotions. One option is to just say, well, how do I work through those emotions? Now, if you are being logical, then good on you. You know what to look for. You're going to be able to make that decision. But I just want you to start taking a more eyes wide open view of risk. And I think what this episode is really about is helping you change your mindset so you can be a more successful property investor and deal with those emotions. Right, we're going to wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. Really does help us get the message out to more people. And hey, if you are looking to invest over the 6 months, it may be time for you to come in for a portfolio planning session. Of course, these are complimentary sessions provided by our financial advisors here at Opus Partners. Really easy way to find out more about that. Just go to opuspartners.co.nz, click the big orange button. We'll give you a call, see if it's the right fit. Thanks for listening to the Property Academy podcast. I'm your host, Teddy Knight. We're going to be back here tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the property market. Until next time.